The government unveils fresh incentives to boost agriculture, targets 21 million rural jobs as presidential fertilizer initiative enters phase 3. Food prices drive British inflation to 3.8% in August, above US and Eurozone. Plus, gold prices retreat from record high ahead of Federal Reserve rate verdict. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Abuja, your guide. The federal government is advancing Nigeria's food security or sovereignty through the Presidential Fertilizer Initiative, now moving into its third phase. Latest data shows that by September 2025, more raw materials for fertilizer blending have been supplied or ordered than in the whole of 2024, with 10 vessels delivering over 560,000 metric tons this year alone. Since inception, the PFI, Presidential Fertilizer Initiative, has produced more than 128 million bags of fertilizer, supported by over 90 blending plants with a combined capacity of 13 million metric tons. While farmers have faced rising prices due to global market and forex pressures, officials assure that supply remains robust. Under Presidential Fertilizer Initiative 3.0 to be managed by Murphy from November 2025, reforms will target year-round availability, cost efficiency, stronger traceability, and increase local sourcing to reduce import dependence and strengthen Nigeria's agro-industrial base. Now, the federal government has announced fresh incentives to boost agricultural investment, which is part of ongoing reforms to unlock Nigeria's vast food production potential through new policies. Vice President Kashim Shettima disclosed this during the Food and Agriculture Organization of the United Nations National and Subnational Hand-in-Hand Investment Forum in Abuja.
We must drive mechanization to reduce drudgery and enhance productivity. We must strengthen the agricultural credit system to ensure capital flows where it is needed most. We must prioritize value addition to create jobs and wealth within our borders. We must build the infrastructure that link farm gates to markets.
Climate shocks, food insecurity, and malnutrition remain pressing challenges. But through irrigation, innovation, and targeted investment, we can turn these challenges into opportunities for sustainable growth, food sovereignty, and regional integration.
Highlight a new partnership between the EU and Nigeria's National Space Research and Development Agency on innovative agriculture. This project will generate critical data and information to aid and attract investment in climate-smart agricultural practices, including irrigation, water resource management, livestock development, and selected value chains across 7 ecological zones in Nigeria.
In Nigeria, the Hand-in-Hand initiative has made remarkable strides in identifying and matching investment opportunities in agriculture with interest of private sector.
Now, Nigeria's economy is showing renewed strength as the National Bureau of Statistics released fresh inflation figures for August. Experts say the report points to a consistent drop in inflation, stronger foreign reserves, and healthier trade balance, which reflect the impact of ongoing reforms. Buplanda Kok reports.
In the fifth consecutive monthly decline, analysts say this trend signals that government's bold economic reforms are gradually stabilizing prices and restoring confidence.
So what we should be celebrating is that we are pushing further and further away from the cliff. Okay, meaning that we are not inching towards recession, and that's noteworthy. Okay, but a lot of these efforts, I must also say, is at the level of the national.
Nigerians who feel the effects in markets and households are hopeful for more relief in the months ahead.
Before, like rice, beans, all this food stuff, before we buy it at a high cost, but now it has reduced.
The price of food stuff, it has actually come down. But other narratives like the fueling, the transportation are still on the high side.
The prices may be coming down, but to my own aspect of my own vehicle I'm using now, this thing we buy it at the rate of 7,000 naira. But now it's 15,000.
Nigeria also reported a record trade surplus, with non-oil exports now contributing almost as much as crude oil at 48 versus 52%. In a similar development, Nigeria's foreign exchange reserves are on the rise, climbing from $32 billion to nearly $42 billion within 2 years. According to economy watchers, the boost in revenue is helping to channel surplus funds into infrastructure and social projects.
It actually gives a good signal for foreign investors, because they will believe that they are coming to where there is a stable economic and there is a better foreign reserve for the country. And also it also helps our foreign exchange. This will help our foreign exchange, especially our naira, to have much more value.
With reforms taking root, it is hopeful that Nigeria is steadily building momentum towards stronger and more sustainable growth. In Abuja, Muplang Dakok.
Well, that report by Muplang Dakok sets the tune for our conversation today. And our guest is Dr. Niyi Akisiju, financial analyst. Dr. Niyi Akisiju, glad to have you again on Business Express.
Thanks for having me. It's a pleasure to be here.
Okay, 20.12%. We seem to be getting somewhere, because the target was for 2025 budget was around 15% inflation figure. What do you make of this development?
I think this time we can start talking about a trend. If we have 5 months consecutive decline in inflation rates month on month, and of course already the target for the CBN had been achieved at 21%. So if we have 20.12, I'm very sure the CBN was not even looking at a possibility of returning 21% in August. So it was quite exciting for people like us who had actually been looking out for when we achieve the CBN target inflation rate. So at 21, it's one milestone in the monetary policy universe. Of course, in the fiscal universe, you also have the 15% target by the federal government. It would appear that at the least the target would move nearer that 15% if it's not totally accomplished.
That's by the end of this year.
Yeah, by the end of this year. I think for me, what is differentiating the trend is the fact that there is a quantum leap in the July to August figure, which I would describe as a swing rather than a marginal decline, as we have been experiencing from April or thereabouts. April, May, June to July, it's been most of the decline are recorded under 100 basis points. But we are seeing higher than 100 basis points. Basically, we are looking at 142 basis points in the year-to-year, year-on-year, in headline inflation. So for me, that is not a marginal decline. It is actually a swing. And would it also continue? If the swing goes on like this, it would.
Now, how much of this can be attributed to the federal government's economic reforms and some of the reforms we've seen in other sectors as well?
I think largely the reforms have been able to facilitate higher, more intense inflow of foreign capital into the Nigerian economy, so much that now we are talking about a reserve that is going very near $42 billion. I think precisely we're talking of $41.6 billion. So, and of course, more exciting actually was that in a month, under a month, more than $4 billion was added, to the reserve between July and August. So it tells you the verve that is driving the economy. And again, you also see the value discovery in the foreign exchange universe. We are seeing how, of course, the foreign exchange transaction pricing are getting very powered on. As at yesterday, it was 1,497, to a dollar. And some of us are actually looking at something near 1,400, which is even below the budget benchmark, for 2025. And it's very possible because, again, we are seeing a higher increase in the inflow. And beside foreign portfolio inflow, we are seeing a lot of activities in exporters, Nigeria's exporters, inflow into the economy. And also the corporates, too. So we are coming from different different foreign exchange sources coming into the country. So to that extent, it will mean that the lower the price of foreign exchange is, it would, of course, impact what normally used to be imported inflation into the country.
Okay. Well, to look at the figures very closely, despite the overall deep food inflation remains a stubborn issue with a month-on-month rise of 1.65%. How is this affecting the average Nigerian household, and how immediate steps could help? What immediate steps could help actually ease the burden?
I think, on the contrary, I want to commend the month-on-month food inflation rate declining from actually 3.12 in July to 1.65 in August. That's a difference of more than 100 basis points. So to that extent, it would mean that it is a validation. That figure is a validation of what we have been hearing from reports and, of course, from surveys of food markets, talking to how food prices are falling. Now, I would want to put a caveat to, we are not comparing, price of food to 2010. Or to 2015, we are comparing relative, to the months before. So to a large extent, it would appear that food prices are declining. And to that extent, because expenditure on food commands a larger percentage of household income. So when food prices continue to decline, it would also mean that there will be surplus, surplus money, surplus income for households to spend on other forms of expenditure, especially discretionary expenditure.
How long do you think this will definitely hold? Are we going to continue? Though you mentioned that you expect to see us achieving close to, if possible, if not possibly, the 15% target that we have for this particular year. But how long can we keep this moving, inflation down?
I think the momentum is just actually starting. Okay. It's just now that we have seen the first sign of momentum with the swing, as it is in the August figure. And I also observed that the federal government is making every effort to reduce or to obliterate any form of cost implication in the space. Just recently, today or yesterday, the FOB levy by the customs was suspended. That is 4% FOB levy by the customs was suspended. There's also the suspension of a possible fuel tax. And I think about 3 or 4 weeks ago, there was also the suspension of the telecom tax, 5% telecom tax. So to a large extent, we are seeing that there is a deliberate policy of pacification of any possible cost origin, in the economic space.
Energy is the main issue.
Yes.
Energy cost.
But thankfully, we're actually having a benefit of two words. We are no longer pressuring our foreign exchange to import in a large volume petrol. And then we are also earning more, thankful to the Dangote refinery, which is now just exporting, what we used to import into this country. So much that we haven't, the latest report is a huge export of about 1 billion liters to the United States of America. So we rather than spending hugely to import from our foreign reserve, we are actually experiencing accretion to the foreign reserve through our export activities. And we are not just even talking about crude oil and the PMS. We are also talking of agriculture, our basic agriculture that used to be the backbencher in possible exports, exploits.
So what would you like to see the MPC do? Because the MPC meeting will be next week.
Yes, I am hopeful that the MPC, for whatever is worth, would review the MPR even if it's by 25 basis points.
Are we going to likely see a kind of loosening, or they will keep holding?
That's the easing. I am advocating for an easing because it is also important that when you get to this kind of points, when the inflationary rate is declining, and of course there is this talk about expanding business activities, the CBN and the MPR Council, the Monetary Policy Council, should, by way of sending the right signal into the market, reduce the monetary policy rate from the 27.25 that it is, even if it's by 25 basis points, so that it can send message of supporting production and productivity into the economic space.
Dr. Nia Kisiju, financial analyst, thank you for sharing your thought with us.
Pleasure as always, man. Thanks for having me.
And let's observe a quick commercial break. When we return, Business Express continues. British inflation in August held at 3.8%, the highest among major advanced economies, and reinforcing expectations that the Bank of England will not cut interest rates until next year. According to official data from the Office for National Statistics, the rise in food prices, which the Bank of England sees as key for shaping public inflation expectations, was the sharpest since January last year and offset a drop in airline fares. Food and non-alcoholic drinks prices were 5.1% higher in August than a year earlier, after a 4.9% rise in July. Last month, longer-term inflation expectations among the public rose to the highest since 2019. Now, the Naira maintained upside against the American dollar as the United States Central Bank makes an important interest rate decision later today. The U.S. dollar plummeted to 1,484 Naira 13 kobo on Tuesday in the Nigerian official foreign exchange market, which was 13 Naira higher than the 1,497 Naira to a dollar quoted on Monday. Let's now see the official exchange rate this Wednesday. And now to capital market. The Nigerian stock market closed on a positive note as the all-share index rose to 141,824.54 points. Investors traded over 992 million shares worth 24.13 billion naira in 22,688 deals, lifting the market capitalization to 89.73 trillion naira. Trading closed with Lotus Shell 15 leading the chart, up 9.7 9% to 63 naira 80 kobo. It was followed by Charlie Ram, which gained 9.77% to 14 naira 60 kobo, and Austin Lars rising 9.67% to 2 naira 95 kobo. Sovereigns also advanced to 7.37% to 3 naira 6 kobo, while international breweries closed at 12 naira 30 kobo, higher from 11 naira 50 kobo. Our stocks held just below recent record highs ahead of a widely anticipated Federal Reserve rate cut taking place against a backdrop of concern about the future of Federal Reserve independence. Muplanda Kok is standing by to give us a summary of how major stocks across the globe are performing. Muplanda Kok is over to you.
Thank you, Musa. So global stocks are actually posting positive numbers in midweek trade this Wednesday, with the exception of the United States of America. But we begin from Europe, where the DAX appreciated by 0.05%. FTSE appreciated also by 0.23%, while the CAC 40 of France depreciated by 0.29%. We move over to Asia, where the market closed mixed this Wednesday. Japan's Nikkei 225 depreciated by 0.25%, while the Shanghai Composite appreciated by 0.37% to close at 3,876.341 basis points, and the Hong Kong index of Hong Kong appreciated also by 1.78%, closing at 26,908.39 basis points. In the U.S., the markets were flat as investors await key U.S. decision from the Federal Reserve this Wednesday. The Dow Jones Industrial Average depreciated by 0.27%. The S&P 500 also went down 0.13%, and the Nasdaq Composite followed suit, depreciating by 0.07% across 22,333.39 basis points. We move over to Africa, where the markets are mixed this Wednesday, except for Ghana, which is leading the bulk with 2.17% appreciation, as well as Tunisia index, which appreciated by 0.92%. South African markets, Kenya and Namibia depreciated, showing red in midweek trade. That's it. It's back to you, Musa.
Thank you, Muplan, for that update. The President, National Association of Scrap and Waste Dealers Employers of Nigeria, Niels Den Ogbu Uche Chukwu, has assured Nigerians that before the end of the year, the country will be free from vandalism of public and private infrastructure, lamenting that these vandals have really given the association a very negative publicity. This is coming from lamentation from members of the public regarding scrap dealers as thieves and robbers.
It is our projection that before the end of 2026, all persons engaged in the business of scrap would have been duly registered for proper monitoring and documentation as scrap dealer.
Well, this is where we end this edition of Business Express. Be informed that all previous episodes are available on YouTube on NT's channel. Business Express returns Thursday at 9:30 a.m. I am Musa Abubakar. Thanks for your company.